We are the Capstone Consulting Group, bringing out capabilities raising businesses up in excellence. Today, let's embark on a comprehensive internal analysis of Hyatt Hotels Corporation. For guidance, here is the outline of our presentation.
Hyatt Hotels Corporation, owned by the Pritzker family, began in 1957 when Jay Pritzker purchased a small LA motel named Hyatt Von Dunn. Within 4 years, it grew into a chain of 6 properties. Hyatt went public in 1962 and split into Hyatt International in 1968. In 1979 and 1982, Hyatt Corporation and Hyatt International Corporation were privatized. On December 31, 2004, all assets were consolidated into Hyatt Hotels Corporation. Hyatt prides itself on their vast portfolio of hotel properties grouped into 4 collections. When managing these amazing brand collections, Hyatt is guided by their established vision, mission, and core values. Hyatt's vision lacks clarity and needs further elaboration. A good vision statement vividly describes an envisioned future with long term goals. Providing more specific details would offer a more actionable path from a business perspective. The mission statement aligns with Hyatt's focus on premium guest experiences. However, it's not specific enough to clearly convey the business. Hyatt needs to paint a clear picture of what its brand collection and workforce can offer to its targeted segments. Hyatt's core values align well with their mission and vision. It is important to highlight empathy, inclusion, integrity, and respect for their guests. However, Hyatt can consider changing the core value experimentation into innovation, since experimentation is often associated with other fields. Now, let's see the key players behind the scenes of Hyatt's growing success. Thomas Pritzker is the executive chairman, followed by Mark Hoplamazian as the president, CEO, and director. Other key personnel include executive vice presidents, covering specific regions like the Americas, EAME, and the Asia Pacific. Let us now delve into Hyatt's business model canvas and see how they create value with their resources and drive the company to its current success. Let's begin by understanding how Hyatt's key activities are supported by their cost structure. Hotel management, property development, and acquisition are the backbone of Hyatt's operations, and these activities are funded primarily through operating costs covering day to day operations. Selling, general, and administrative expenses ensure seamless franchise management, brand marketing, customer service, and HR management, while capital expenditures drive property renovation and technological advancements. Next, let's explore how Hyatt's value proposition resonates with their diverse customer segments through tailored customer relationships and effective channels. Hyatt tailors value propositions for diverse customer segments, offering luxurious accommodations and enhancing guest experiences with travel and event services. They prioritize excellent customer service rooted in understanding individual preferences and well being. The World of Hyatt loyalty program fosters strong customer relationships through personalized rewards and targeted marketing. Gathering feedback further strengthens bonds with patrons. Hyatt reaches customers through various channels, including internet travel intermediaries, direct bookings via their website and application, and global distribution platforms. This strategic approach widens Hyatt's global reach and ensures accessibility across markets. Customer segments range from business professionals to leisure travelers, families, couples, and solo guests, all finding comfort in Hyatt's offerings. Finally, let's explore how Hyatt's key partnerships drive their revenue structure, ensuring sustainable growth and profitability. Hyatt's partnerships with owners and operators, suppliers, and loyalty program partners are instrumental in generating revenue streams. Revenues from owned and leased hotel operations, management fees and distribution, and destination management revenues constitute significant portions of Hyatt's income. Additionally, partnerships with third party owners and franchisees enable Hyatt to expand their global reach, contributing to their overall revenue streams.
Let's now proceed to the PESEL analysis. For political, the stability of the political environment in countries where Hyatt operates can affect its expansion plans and investment decisions. A stable political environment instills confidence and attracts investment, which can help the company expand its operations. On the other hand, political or civil unrest in a certain country or state can limit consumer demand. Local regulations and laws regarding tourism, hospitality, and hotel industry operations can impact Hyatt's operations. For instance, tax policies can impact Hyatt's business such that costs may increase if there are changes in existing federal, state, local, or foreign tax law. The same goes with labor laws and health and safety regulations and requirements that may vary between countries. For economic, inflation rates can impact a company's operating costs as it can increase the price of labor, raw materials, and energy. If Hyatt fails to apply cost-cutting measures to control and adapt to these costs, its profitability will suffer. As a globally operating hotel chain, exchange rate fluctuations can impact the financial performance of Hyatt and affect the company's revenue and profit margin. Interest rates play a crucial role in determining the cost of capital for the hospitality industry. The current case of rising interest rates in the US can increase the cost of borrowing for Hyatt, thereby decreasing its profitability and also impact consumer spending as they too bear the burden of the higher rates. Economic downturns or recessions may lead to reduced travel demand, upon which Hyatt's revenues are significantly dependent on, thereby affecting occupancy rates and room revenues. For social cultural, Hyatt's brand collection of hotels, resorts, and other properties caters to a diverse range of guests, so they need to be aware of the changing demographics and lifestyles of each state, region, and nation where they operate. Social trends such as increased awareness of wellness and sustainability have affected the hospitality industry. Hyatt has responded to this trend by offering health and wellness programs as well as sustainable initiatives such as reducing plastic waste. Social events in the locality are also an opportunity for Hyatt's local brands to offer their spaces as events places. Hyatt also needs to be aware of cultural festivals and events in the countries where they operate. This can provide an opportunity for the company to offer special packages or services tailored to the occasion, which can attract guests. The local culture is also important to consider when creating or improving hotel offerings to take into account the local customs and preferences of the residents in the area and create a personalized experience for them, as well as to create an environment that is culturally sensitive and inclusive. Public health concerns such as epidemics or outbreaks impact travel patterns and hotel occupancy rates when travel restrictions are imposed and health regulations are tightened. More technological, in today's digital age, having a strong online presence adds to the attractiveness of the business and its services. Since the majority of consumers are using the internet to inquire of and make their hotel bookings, Hyatt must invest all the more in ensuring a competitively robust online presence and enhance its digital communication channels to make the booking experience and the rest of the customer journey easier for guests. Hyatt is using data analytics and artificial intelligence to gain insights into customer preferences, personalize the guest experience, and improve its services and offerings. By collecting and analyzing data, Hyatt can make informed decisions about its operations, marketing strategies, and investments. The use of mobile technology has revolutionized the way guests interact with hotels. Hyatt is leveraging mobile technology to provide its guests with a seamless experience. The Hyatt mobile application allows guests to book rooms, order room service, check in and check out, and access hotel amenities, and monitor their points balance and rewards from their mobile devices. Many accommodations now revolve their value proposition around their use of smart and sustainable technology. Hyatt integrates smart technology into its hotels to provide guests with a more personalized and convenient experience. For instance, some of its hotels have rooms that are equipped with smart devices that control the lighting, temperature, and entertainment systems. For legal, the company is at risk of facing legal challenges related to data protection, especially with the increasing use of online platforms for reservations and payments and the accompanying information technology system failures that can be exploited in cyber attacks. Hyatt should ensure its compliance with data protection laws and develop robust data protection measures to safeguard its customer sensitive information. Hyatt also needs to be aware of changes in immigration laws and policies as it employs staff from around the world and as it handles data of customers from all over as well. The company also faces legal risks related to environmental laws and regulations. Hyatt must comply with environmental laws protecting air and water quality, hazardous and solid waste disposal, and other areas affecting the environment. For environmental, the increasing concerns about climate change and environmental sustainability are prompting hospitality companies like Hyatt to adopt eco-friendly practices. Hyatt has to comply with various environmental regulations relating to waste disposal, water treatment, and emissions control. Failure to adhere to these regulations can lead to legal and reputational problems. Hyatt's management must also prepare its properties, especially those that are located in various regions that may be prone to natural calamities like hurricanes, typhoons, and earthquakes, with appropriate measures, procedures, and resources. These incidents can disrupt hotel operations and affect customer experience and tourism in certain regions. Hyatt's operations also depend on natural resources such as water, fuel, and land. The scarcity of these resources can affect the company's operations and profitability. Here are the two major rivals of Hyatt, Marriott and Hilton. Marriott is the market leader of the hotel chain industry in the US. It offers the most powerful portfolio in the industry with over 30 brands and nearly 8,700 properties across 139 countries and territories. While Hilton is one of the world's largest, fastest growing hospitality company with 22 brands and 7,530 properties in 126 countries and territories.
Next up, we have the financial analysis. This pie chart shows the revenue breakdown of Hyatt in 2023. We see here that revenues for the reimbursement of costs incurred on behalf of managed and franchised properties contribute the most, that is, 45.87% or $3,058 million. This is followed by revenues from its owned and leased hotels at 20.08% or $1,339 million. Distribution and destination management is next with 15.48%, management, franchise, license, and other fees with 14.0%, and other revenues at 4.5%. This brings us to a total net revenue of $6,667 million in 2023. For its operating expenses, just as it brought in the most revenue, managed and franchised properties also incurred the highest costs at $3,144 million, or 58.77% of total operating expenses. Hyatt's owned and leased hotels follow through with $1,022 million, or 19.10% of operating expenses. Distribution and destination management made up 15.85%, and the rest fall under direct costs, which is at 6.28%, bringing Hyatt's total operating expense for 2023 at $5,350 million. Comparing Hyatt's revenues with its operating expenses, we see that total operating costs already took at least 80% from total revenues. And this chart here shows us that has been the trend for the past 7 years since 2017. Now, if we add Hyatt's selling, general, and administrative costs, we see that except for in 2020 and 2021 during the pandemic, total costs have climbed up to at least 90% of Hyatt's revenues each year, resulting in a return on sales or profitability ratio of only 3.30%. Moving on to balance sheet items, we see that the value of Hyatt's assets significantly increased starting 2021 due to the company's aggressive business and land acquisitions. On the other hand, since many of these acquisitions were paid for in cash, we see that Hyatt's cash and cash equivalents are steadily decreasing. These decreasing cash flows in turn led to lower liquidity starting 2021 until 2023. On the other hand, asset turnover increased because of the simultaneous increase in both total assets and net revenues, showing efficiency in Hyatt's asset management. Overall, return on equity from 2022 to 2023 decreased from 12.30% to 6.17%, largely due to 1. Significantly lower profits, 2. Only a slight increase in efficiency, because while there is increase in assets from multiple business acquisitions, it was balanced by a corresponding decrease in cash, and 3. Only a slight increase in leverage, because while total assets did increase significantly, stockholders' equity decreased. Considering that Hyatt belongs to the service sector, wherein the final product is a coordination and combination of a variety of services, here is Hyatt's modified value chain analysis. For the primary activities, we have tourism product creation, internal logistics, marketing, destination services, and post-sale services. Product creation covers those activities needed to create or prepare the company's offerings or tourism products. In Hyatt's case, this includes the development of room and tour packages, the building of its properties and hotel brand collections, and preparation of its accompanying on-site offerings. Internal logistics will include activities that will ensure a seamless flow of the delivery of experiences to customers such as those listed here. Marketing deals with positioning Hyatt as an upscale and luxurious brand, conducting marketing research and applying its produced insights to serve each distinct guest segment, and running the hotel's loyalty programs and marketing campaigns. Destination services cover the actual delivery of Hyatt's offerings, experiences, and services on-site and through direct interaction. And finally, post-sale services aim to service customers even after sales are made. For Hyatt, this includes their feedback or evaluation surveys and targeted email marketing, to name a few. Next, we have support activities, which are infrastructure support, human resources management, technology and information systems, and resource and product development. Under infrastructure support, we have Hyatt's executive and regional management teams, and the sales, development, and operation teams, which are divided into 3 levels: global, regional, and hotel or property. Under HR management is Hyatt's commitment of care to its employees through the provision of personal and career development opportunities and free mental health services. The transition to a new central reservation and booking system in 2024 by Sabre Corporation, a leading provider of software and technology, is among the recent highlights of Hyatt's technology and information systems. Lastly, resource and product development includes the management of physical and financial resources such as the land and business acquisitions, renovation projects, and maintenance of managed properties.
Hyatt Hotels pursue strategies that drive long-term sustainable growth, which are centered on creating and capturing value for its guests, customers, members, and stockholders. Their corporate strategies include maximizing core business, integrating new growth platforms, and optimizing capital deployment. Next, we have Hyatt's business level strategies. Hyatt adopts an asset-light capital strategy, which involves the disposition of properties to be sold for the primary purpose of reinvesting the sales for expansion. Also, net proceeds from the sale of these assets and properties are used to pay Hyatt's long-term debts and return capital to stockholders. Furthermore, Hyatt Hotels consistently centers its strategy towards growth. The business mainly applies significant strategic expansions of their luxury, resort, and lifestyle portfolios, extending to new markets and new developers with Hyatt Studios, and persistently introduce each of their brands to certain markets and drive brand growth to stay aligned with their main objective, which is to be the preferred brand for owners and developers. Next is Hyatt's functional strategies. Presented are its marketing mix, service, operational, and technological strategies. Now, let's delve into analyzing Hyatt's resources and capabilities. As you can see in the framework, almost all of its resources and capabilities are at par and a sole sustainable one. Franchise agreements is an SEA, as these are valuable, not easily obtainable, not easily copied, and the organization is organized in capturing its value. Furthermore, the results of the analysis indicate that Hyatt needs to step up in creating competitive advantage, acquiring resources, and practicing capabilities that are not easily adaptable and obtainable by its competitors. For additional information, we have identified strengths and weaknesses of the firm.
Finally, here are 3 major points for critiquing for Hyatt. Asset-light strategy addresses Hyatt's weakness whenever consumer demand drops by increasing asset efficiency and profitability while decreasing business risks. Next, the acquisition of luxury global booking and travel platform Mr. and Mrs. Smith addresses Hyatt's weakness in global presence. Third, decreasing liquidity might be a problem considering that $751 million worth of outstanding debt will mature by 2023. With that, we end the entirety of Capstone's internal analysis on Hyatt. Thank you.